page on the top left of your handout, and it's on the board. Essentially, the topics we're going to cover are the depression. Anybody think we're in a depression right now? Anybody seen any problems, financial, foreclosures? Just a small thing, though. It's over. All the people are saying it's over with, right? Not quite. Okay, what was it caused by? What's going on? Why are people being foreclosed on, and why did Wall Street go down so fast? It's kind of trickling up, but who knows? Well, part of it was started September 14th, 2008, when Lehman Brothers went bankrupt. But that's insignificant, right? Nothing associated with them of any importance. Yeah. Right after that, by the way, all of a sudden, all of these lenders were either stopped giving loans or collapsed, went bankrupt. All sorts of things were happening. Why? Was it all triggered by Lehman Brothers? Yeah. Lehman essentially had set up a way that they conned investors into putting up money. They used 30% of their money to buy notes from mortgages. What happened to the other 70%? Well, a lot of it went to fees. They had commissions at every step of the game. And then they set aside a little reserve fund so the investors were paid back, so they never knew there was a problem for a long time. Okay, now what did we talk about before? Before 2005 mainly, you went to a bank or a lender and you got a loan for your mortgage, right? Of course, back then we were saying that they weren't really lending their own money. They were prohibited from it. They were lending credit, or they deposited your promissory note, which funded the loan, and then they fractionalized it on Federal Reserve, et cetera. But that is past. From 2005 to 2008, that's not true anymore. What they did is they created these special purpose vehicles, securitization trusts, and the trusts bought your note directly. Wait a minute. When you signed the note, didn't it say on there IndyMac Bank, Countrywide, Greenpoint Financial? They disclosed to you that that was the lender. What do you mean? You're saying that they didn't even do anything? Yep. They got a commission to lie. That note, that deed of trust, the real substance of what went on was never disclosed to you. Isn't that fraud? So previously they lent credit, not money, and there were a lot of arguments for that. Then the trusts bought the notes. The lenders got the commissions to lie. They weren't really lenders, they were nominal lenders. There was no disclosure. The lender or nominal lender didn't actually loan, and the trust bought the note. Then the nominal lender went bankrupt in many, many cases. If they're not around anymore, who's supposed to enforce the note? So the servicer and the trustee often come in. How many people do you know that are in foreclosure and the original lender isn't foreclosing? It's Aurora Loan Services or Litton Loan Servicing or Deutsche Bank Trust or a whole gamut of others. Well, if the original lender isn't around anymore, they can't do anything. So they try to pick up the pieces and fool you into thinking that they have the right to do what they're doing. Okay, another one, MERS. How many saw on their trust deeds? MERS. Okay, MERS, for the purpose of this transaction, is the beneficiary and is the nominee for the lender. Okay, well, they had to have that beneficiary for this thing right now so they could file it. But they're not the beneficiary. And whenever they claim to be, and we find it all the time, I love picking apart assignments, substitutions of trustees signed by MERS as beneficiary. All the courts across the nation, less so here. We've got a new one in Ray Huang, but and the bankruptcy judge Buford loves them too. But Nevada a little bit, Ohio, Kansas, Pennsylvania, Florida, New York, all across the nation, they're saying MERS is not the beneficiary. They can be the nominee for the beneficiary, the original lender or the other, if they are currently a member of MERS. Well, how many lenders are no longer members of MERS? Whew. You mean to tell me that MERS can't be nominee for someone that isn't a member anymore if they went bankrupt? Does that mean if they write a new assignment, MERS is nominee for that lender and the members, they're not a member, that assignment's invalid? Or the substitution could be invalid of the trustee? My word, we don't have any cans of worms here, do we? Yeah?
For the benefit of those of us who don't know, what is MERS?
Okay, MERS is a registration company set up by the main mortgage companies that are out there. They're actually in Virginia, but they give an address in Michigan. And what they tried to do was set up a registration system. Now, if a lender transfers their beneficial rights to your note and trust deed, actually, they're supposed to record it here at the local recorder's office. That costs them a couple bucks, and they don't like to do bucks anymore, and they have to, so they tried to set up MERS to do the recording for them in the background, not really record it, but just put it on their books and come back and claim later they did it. Okay? But the whole thing is sinking fast. MERS has been trying to make up for the problems. If they're not a member, they can't be a nominee for them anymore. Their whole registration system is causing major problems and maybe going down the drain. But you need to know what you can do and what you can't. On the other hand, if they are currently a member, is there a problem?
No, I was just going to recommend, remember MERS, MERS is an acronym, and I can't remember what it stands for.
Mortgage Electronic Registration Systems. And it's on 80% of the deeds of trust as a beneficiary for the purposes of this transaction and only nominee for the lender. But their whole system's going belly up at this point. So in courts anyway, they're trying to enforce it, and courts across the nation are saying, no, if you come as nominee for that lender and they are currently a member, it's valid. Otherwise not. Now, we had a big bailout, didn't we? A lot of people came up to the table with their hands out. AIG was one of them. Well, why was AIG out there? They're just an insurance company, aren't they? I thought this is mainly for those that got caught with the hands in the pot for the derivatives. AIG was an insurance company. Well, guess what? When they set up these special purpose vehicles, Lehman Brothers set them up, Securitization Trusts, the lower the credit rating of the people, the high risk loans they took in, the more insurance they had to buy to raise the credit rating of that trust so they could sell it on the open market to the investors with a higher credit rating. Who was one of the major companies out there that ensured that defaults and foreclosures wouldn't occur on those high-risk loans? AIG. You mean to tell me that they bailed them out because they were paying a lot of default insurance to the investors in these trusts? Oh. That kind of clarifies things, doesn't it? Now, one of the big things is, though, in that case where yours was bought by a trust, and I would say 95% of them were, even though they don't want to tell you that, even Washington Mutual, which never tries to tell you that, IndyMac, Countrywide, almost all of them were using a Lehman Brothers trust. Okay, now, they set it up for them to collect insurance. Well, if they're foreclosing on your house, what are the chances that the investors got partially paid off at least by insurance? If they got paid by insurance, why are they still going after your house? Is that double dipping? Ooh. Does this fraud seem like it's not only at the beginning, but like it's continuing and avalanching? Whew. So why the heck would you want to get a loan on it? Why would you want to find out? This can of worms is pretty heavy. Some people can't stomach it. But that's what we...
Then you get the whole thing free.
Well, That's what people try to do. A lot of judges don't want to give that, though. But there are tricks that I'm learning from some lawyers and that I pass on to some lawyers in which you can't come out and say that. If you tell a judge, Your Honor, I want my mortgage free and clear because of all the fraud that's there, he's going to say, that's not equitable. This is an equity court, and it's not equitable. So don't try that. You'll get thrown out or your case will get dismissed. No. You've got to kind of go at it sideways. Okay? What you do is, Your Honor, I really want to pay off the real beneficiary of this loan. But it's not that nominal lender there, IndyMac, Countrywide, Greenpoint, whatever.
Or the servicer.
It's, what's that?
Or the servicer.
It's definitely not the servicer. And it's not actually even the trustee. The trustee may represent that trust. But then again, is it really the trust that's the beneficiary or the investor? Well, Your Honor, I need to find out the name of this trust, but I really want to find out who that true beneficiary is in the background, the investor, and I want to find out if he got paid by insurance. I really want to pay this loan off. I'm not trying to get out of it. I really want to honestly find out who is hurt. If there are any damages, I want to find out who was damaged. The trust can't be damaged. It was the investor. He's the one that fronted the money. And he got ripped off too. He put in 100% and only 30% of it got invested. And then they tricked him into doing a reserve fund so he could get paid for a while to keep his mouth shut. This is a trick, a fabrication from the very beginning. Okay, let's go a little bit into foreclosure sales right now. They've been avalanching since October of 2008. The first wave was the hard money loans. Okay, everybody got hard money loans, high interest rates, they couldn't keep them. Now, they're all saying, well, this is over with now. You know, the worst is in our past. So now we can watch the stock market go up, et cetera. You ain't seen nothing yet. The option arms are just starting to avalanche is the second one. The Alt-A loans, option arms, the people are just, they're skyrocketing payments on them. People, it's just started. We haven't even seen the first half yet. Okay, market wrap with Mo Ansari predicted a new downturn to depression because of it. It's probably going to be a depression with high inflation. How many people have seen prices rise? If you go to the 99-cent store, can you get those 16-ounce crackers anymore? Well, they're 8 ounces now. They went to 12, then to 10, and now they're 8. Inflation's already hitting. And you haven't seen nothing yet. Well, we just did all these bailouts. Where does that money come from? According to Keynesian theory, that doesn't make any difference. Government can do whatever they want. Keynesian economics is dead wrong. The Austrian School of Economics under von Mises, you study that, you find out what real economics is. Okay, what are past mistakes? People bought euros, but they got hurt there too because they went down as well. Canadian dollar did better. Gold and precious metals have skyrocketed. Well, that's what happens when there's inflation. Real assets become more valuable. Okay, how do you know if you have a predatory loan? What are their elements of that? Variable interest rates, negative amortization, balloon payments, prepayment penalties, interest-only periods, and of course, lack of disclosure everywhere. How many people have a mortgage with a yield spread premium? Well, what is a yield spread premium? It was a bribe to the broker to get you a lousy loan. Straight and simple. I've seen people that could have gotten a Veterans Administration loan and the broker talked them into this because the interest rate was lower. Why? He wanted that yield spread premium. But again, when you do the auditing, you have to be careful because a yield spread premium where they didn't pay any origination fees, the borrower themselves, not going to stand up well in court, unfortunately. It was a bribe, but the borrower didn't pay anything, so they're going to say those were just the fees. So you have to know the background on this. You don't just look for a yield spread premium. You look for factors to support it in court as well, like disclosures or lack of it, etc. Now, what if you have a predatory mortgage? What can you do? Well, you can sell it, and you either lose money or the bank agrees to take it for less. You can go bankrupt and then maybe try to either get a reformation or do an adversary proceeding, which is just a complaint. It's a lawsuit in bankruptcy court. You file your bankruptcy, and then but I don't find any lawyers that are willing to do these, unfortunately. You can offer a deed in lieu of foreclosure if you just want to get out and don't want to have them do the foreclosure. It's less of a ding of your credit if you do a deed in lieu of foreclosure than if they foreclose on you, but if you want to give it up. Or you can short sale it to a friend who might help you later. But you can usually get a short sale if you get the bank to agree, which is a medium portion of the time. You get it way, way down. You can get sometimes a really good price. So if you sell it to a friend who agrees to help you out later under the table, possible. Or you can sue the lender. Or you could do a short refi. Almost nobody knows what that is, and it almost never happens. It's where you get the bank to agree to get a refi of that loan at what the value really is, and they don't want to drop the principal and do the short refi. So it usually won't happen, but sometimes can. You can do a loan modification, but right now they won't reduce the principal. You might get a point or a half a point off. The loan mods aren't really coming out well. Those that do come out well sometimes are those that the short sales and loan mods with teeth are the most popular, where they do a loan audit through a lawyer and file a complaint too. And then they ask for the loan mod. They're more likely to get it if you can scare the whatever out of them. Let's see if this goes down a little bit more. Oh yeah, here we go. Now, short sales and loan modifications with teeth are the most popular. A good lawyer doing a loan mod gets an audit first and then sues to wake up the negotiations. It goes from loan modification to loss mitigation and then to the lawyers themselves at that point. And if you really scare them, you might get a real loan mod. Otherwise, they don't want to. Some tools, you can file a rescission if you have the right elements of fraud for California rescission or TILA. You can file a list pendants for your complaint that you filed. All of these kind of cloud titles. So they don't want it clouded if they foreclose and try to sell it later. You can get a forensic audit of origination loan docs and look for violations of truth in lending, RESPA, state laws, etc. You can audit the recorded documents as well as the origination documents. Like I say, assignments and substitutions, notices of default, etc. I find errors all over. Just recently, I know Dennis, back there, a videographer, is an old guy that has a property. I got his foreclosure sale canceled. Aurora was trying to do it, and there was no assignment to them at all, and they had signed the substitution of trust deed when they didn't have any powers whatsoever. So in the past, I find letters didn't work well, but in this case, I put it in blank and had him work it. Essentially, we put in there quality loan services. This is a fraud. If you continue this fraud, you will be sued. And if you seek non-monetary status, we're going to refuse it because you have perpetrated the fraud and continued it. We will get monetary damages against you unless you cancel this sale. It worked.
Sent all those affidavits to them, and they didn't do anything. It's still going on. They trustee sale and everything.
They had gone all the way.
They walked all over us.
Well, this guy, if you knew him, he's blown everything we've done for him. We filed a complaint, he didn't show up in court. He did a bankruptcy, he didn't show up for the creditors meeting. He's just blown it right, left, and sideways. But I finally did one ditch effort, which he couldn't do with the complaint because he lost it, and we finally won that one. Yes?
I'm not sure how significant this is, but from my understanding, Aurora is not a registered corporation with the California Secretary of State, which technically should mean they have no right to do any business in this state.
Except that California is a non-judicial state.
I understand that.
And there's no standing.
Well, I understand that should give them no standing in a court proceeding if it is in court.
They do whatever they want.
Well, I'm not saying here. I understand they're going to do what they're going to do, but Aurora is not licensed to do business here. Chase Home Finance is not. Chase Home Loan. Many of them are not registered with the Secretary of State.
Okay.
Can you repeat that, just briefly for the recording, please?
Yes.
What he said?
Um,
No, I'm talking about him, he's got the mic and stuff.
Who's talking?
No, can you?
Okay.
Well, he wants you to repeat what I said.
Okay,
because they'll pick up better
essentially
on
what he
the
said was, aside from the fact of I've already told you that Aurora, unless they have an assignment that's valid, that's filed properly from the original lender, is not a proper party either for foreclosure or for later unlawful detainer for eviction after foreclosure. What he's saying is, in addition, they're an outside LLC and they are not registered in the state of California to do business, and therefore they can't do business. They're not a national association like the banks themselves are, and that have the right to do interstate commerce. Thank you for that. I'll look at that more.
Well, Wells Fargo Home Loan is not either, for instance. They're not licensed registered with the State Department of Real Estate.
Okay, well, Wells
A
Fargo,
whole slew of them are not.
most of the time when Wells Fargo comes in, they come in as Wells Fargo Bank National Association, and they do have the rights. They're acting as trustee, of course, but as a bank they do.
But if you were in court and it was listed as this particular entity, I'm just making that point. I
Right.
don't know where it would go, but it doesn't hurt to be aware of that.
Thank you. In other words, look it up and see if they don't come in as a national association or one of the banking names, they may not have the right to deal in that state. Yes.
For instance, J.P. Morgan Chase Bank has been registered here since 1950 in California. But Chase Bank USA NA is not registered.
Chase Bank
Chase
NA.
Bank
Yeah, but
USA
NA.
NA is not registered.
But an NA doesn't have to be registered.
Well, they're not registered with the California Banking Corporation either. So
Right.
I'm just bringing all that up. I don't know all the significance.
But only the controller of the currency has control of those banks that are national associations, FSBs, etc. If they use that title, National Association FSB, they don't have to register with the Secretary of State. They have interstate rights, so they can come in. If they don't have National Association, don't have FSB, or one of the other titles for a bank, then you would check to see if they have the rights to work in this state. Yes. Anyway, let's go on. So we were talking about the third tool, number 3. Look at the recording documents, the assignments, substitutions, notice of default, notice of sale, trustee's deed upon sale itself, and look for flaws. Always check with the lawyer what's best for you. You should never do a rescission unless the lawyer thinks it's good for you, because there are negative sides to rescission as well. Well, first of all, let's explain what is a rescission. Some people don't know that. Okay, if you rescind the loan, you're saying that there was fraud from inception and that you cancel your signature and that loan never occurred. You don't owe them anything except the balance that you were given, no interest, no other things, etc. Now, under truth in lending, it has even more teeth. You can deduct all the payments you've made, all the interests, etc. Everything that's been there. And it's up to the bank to take the next step under truth in lending. So if you can do it under truth in lending, it's actually better. If you do it under state rescission, which is Civil Code 1689 and 1691, you're supposed to offer to pay them back first if they acknowledge your rescission. Okay, so actually, you can be at a bad position if you rescind under California State Code, and that comes out in court later. But right at the beginning, they usually won't acknowledge your rescission. They'll say it's wrong, you have no right to do it, and they'll just continue if it never occurred. Okay, now rescinding, check with your lawyer to see what's best for you. You can rescind the contract and all the documents, which is the note on all the documents like the trust deed. It removes the security of the deed of trust, but only with court approval later, theoretically. Some say right away, some say later, but it's essentially trying to invalidate the security by invalidating the note that it's based upon. If the loan audit finds violations in origination loan documents, that's a heck of a lot of leverage. Okay, some lenders will ignore it. So then if those lenders don't want to hear what the audit results were, then you can go to a lawsuit. And that's what good lawyers doing loan mods can do. Still trying to figure out how do I get this thing full screen here. Hold on. We're missing part of this.
The lower left-hand corner.
Do what? Wait, there it is?
Next
Nope,
one over.
wrong one.
Or the third one, sorry.
Oop,
The last one on the
Yeah,
right.
that's it, that'll start.
there, thank you. Okay. If an audit of recorded documents, number 3, finds errors, the sale may be reversible. And as I've said, occasionally it's even stopped. Often eviction by unlawful detainer can also be stopped if you're seeing, especially recorded document problems. And then, of course, the results can be used for quiet title and wrongful foreclosure procedure, causes of action in a lawsuit.
How do you find a legitimate lawyer? Saying all this should be done with a lawyer. There's no lawyers out there that are honest enough to do this.
Well-
They'll take your money, but they'll never do anything.
I'm researching that on the side. I've been studying under a Neil Garfield
Yes.
out of Arizona, and he practices in Florida, but he's giving seminars to lawyers, and I've paid him to take his seminars, and that he's the one I'm studying under. He has lawyers that he lists on his website that quote, lawyers that get it, but I tried calling them and finding most of them have no clue either. But there are a couple. Timothy McCandless up in Lancaster. I found him on the internet. He does occasionally blogs on Garfield's blog. He seems to get it. And he's up in Lancaster, though, Victorville area.
Timothy, what's his last name?
What's that?
Last name, Timothy.
McCandless. I think it's McCandless. He seems to get it, from what I can see. But he's way up there. There's a local lawyer that I've been told, Walter Hackett III in Diamond Bar, but the person I talked to was very unhappy with the terms he put in the contract, so I'm waiting to see whether he's or not. He sounds like he may know what he's doing. So you know him?
Don't know him. I've met with him on a case.
What was your impression?
Very slow. He's filed some lawsuits regarding this, kind of waiting, but kind of expensive for, I don't know, not popping on it.
Okay. Well, I can't say I'm recommending anyone here. I'm just throwing out names because you're asking. But I have heard he's good, but that he can be very expensive. One guy said he wanted half the house if he were able to get it. So I'm not going to say I recommend, but it's names I'm aware of. I'm looking at others. Probably there's a Michael Pine down in Encinitas who's lecturing other lawyers. So he's probably the best one out there, but he might take the whole house. I'm joking, of course, but he's extremely expensive in his seminars that he's seminaring others. He's very knowledgeable, very good. If you can find a lawyer that has studied under him in addition to Garfield, you would probably have been a very good lawyer. But Michael Pine sounds like he's maybe one of the best in California. So anyway, back to some reasons to rescind. Like I said, truth in lending violations, a notice of the right to cancel. If there are errors there, and I'll show you a couple exhibits of that in a second. If there are truth in lending violations of the APR, the annual percentage rate, violations of undisclosed finance charges, any of those three, you have 3 years to rescind if you wish. And a TILA rescission is a better rescission in court later than a California fraud rescission. Yes?
How do they reconcile a rescission with equity, with going to the court and saying that this is a fair transaction?
Well-
Getting the house with no loan.
Okay.
No payment.
So his question is, what happens when you go into court after you've rescinded? Okay. Usually what happens is, well, I'll give you some examples. It depends too on whether you go in pro per or if you have a lawyer. But what you'll do is, the first step is you file the complaint. with all the ammo there. And if you put in federal issues right away in the complaint, the bank will usually move it up to federal court because the federal court likes to get rid of these things right, left, and sideways. If you don't put the federal issues in right away, just the state issues, then the rescission is dealing with state issues, and it has less teeth for ammo. What will often occur is you'll file a complaint and you'll ask for a temporary restraining order if there's a sale pending or something else happening, and the judge will usually give you the temporary restraining order. Now, the next step, though, is that only lasts for maybe 20 days, so you've got to then go back and get a preliminary injunction and then an injunction. And my experience, I don't know what happens all the time, but a lot of the time, if you're improper, the judge will say, well, what do you owe this lender? You owe him $40,000 in arrearages? Well, okay, pay the $40,000, I'll give you the preliminary injunction. How many people have that in your back pocket? Okay. I have heard, and I can't corroborate it, but I understand there are some lawyers that are able to get them, not improper, but without the arrearages, but I don't know who, and I can't guarantee that, but I have heard that. Okay, so anyway, does that answer your question?
Information for anybody if they need it.
What's that?
I did what you're talking about, and the courts of equity actually told me I was getting an injunction, and they never done it. They told me I was getting it, and they never done it. What I would suggest is using common law and doing an intent to preserve interest and recording it on that property, and you got it. And putting your claim number on it with that intent.
Okay. I just lost my other mics here, Chair. There's one. Hold on a second. Oh. Yeah, what happened on this one? Just this guy. Okay, can you hear me now? Okay, so we've got truth in lending violation possibilities for rescission, and you have 3 years to do it under truth in lending. Violation of misrepresentation, fraud, lack of consideration, California Civil Code 1689, 1691. Rescission can void the security interest of the lender, but sometimes they say it's not really voided until the court approves it, but always check with a lawyer for what's best for you. Okay, now let's take a couple looks at what a notice of right to cancel can look like. Okay, notice up in the top, it says February 23rd, 2006. They have to put the date of the transaction, which in this case was a day later, and so that date was wrong, and that's a violation. What I always do is look at the deed of trust and see when it was actually notarized. That was the actual date, even though they often have a date before that. So if that date's wrong, the whole thing is invalid, it's a violation, you can rescind. Sometimes you don't find the second date. You see February 27th, 2006, that's the date, the deadline for the borrower or the homeowner to rescind before he gets the money. If that date isn't there, or it's not 3 days later, it's wrong. Well, take a look, here's one right here, notice of right to cancel. Okay, let's look, what's the top date here? The date of the transaction, which is, anybody see a date there? This was a clear violation then. They don't have a date. Okay, how about down below? If you cancel by such and such at midnight of, what's the date down there? Oh my word, this blank too. This is doubly in violation. They don't even have a date anywhere. This was a violated notice of right to cancel. Okay, what's an audit look like? Well, there's different kinds of audits. I know at AmericanLoanAudits.com, we do two. We do a compliances audit. We pay a company to use their software to recalculate everything. And here's the top of what can show up sometimes. If it was a HOEPA loan and if it failed the tests, and down below the TILA finance charge, the result was a failure. It was a variance of a negative 1,700. Sometimes we only find a negative 100 or so or whatever. We try to find broker fees that weren't disclosed in the prepaid finance charges, and if we can throw it into violation because they didn't do what they're supposed to do, that's all the better. But anyway, here's just a top summary box of a sample of what can occur if you have the violations required. Okay. Now let's go into courts and causes of action. Okay, truth in lending, TILA, and RESPA are federal laws. Misrepresentation and fraud are most sued as state laws. You can only sue in federal court if you have a federal issue. Some people try to sue when they only have state issues, and they'll throw it right out and say, go to state court. Rumors are that borrowers are not lucky in federal court. Everyone lately I've seen that goes to federal court, the judges don't give a heck. They will dismiss your truth in lending claims and your RESPA claims and tell you to go down to state court for your others. So I'm tending to find if people file lawsuits, you can mention the violations for federal, but I don't claim them as causes of action. Get your discovery in first before you even mention them, in most cases. So I've seen better results in state court for both, yes.
What you just said, get your discovery regarding your errors on the loan audit, your
Well,
pleadings.
Yeah, well, you can do all kinds of things to make them admissions, other papers to further corroborate what we've already discovered. You can make them prove your case by discovery. And once you've done that and you've got more of the ammo in, if they do move it to federal court later, you've now got more proof than before even. And even the federal judge, unless you get Manuel Real, or we'll talk about him in a second, or one of the others, there's most of the judges though in the federal court though are not friendly, either impropers or in many cases even lawyers. They're business friendly. And at least in the central district. Around the nation that's not necessarily true. People in federal courts back east and everywhere else are doing fine, but right here, Central District, LA at least, it's a terrible predicament. But just to give you a, let's see, I hate to use the word AH, but there's one judge that stands out above all in the Central District, Manuel Real.
Did you mean asshole? Just want to clarify the term.
Yeah, I mince my words a bit. But he went after a lawyer. He made him pay back all his fees to his clients, pay fees to the, et cetera, because he put in all his cases that he wanted the original note, and he didn't like that. So he pulls out any case that says, I want the original note, pulls it into his area, and to dismiss it as soon as he can. If you ever get him in a federal case, dismiss out immediately. Just don't even bother. Try to get another one, which you saw is Russian roulette, and most of them are against you anyway, too. But he will do everything in his power to get it as soon as possible. Stephen Wilson, I've seen do so there's a whole bunch of them. But I basically stay out of federal court if you can, at least for a while. Okay, now we're going into the pooling and servicing and trusts information again. Historically, previously, the borrower got a loan from the lender in exchange for signing a note and a deed of trust to secure debt. Okay, that's what everybody thinks. You got a loan? Okay, who is your lender? Countrywide, IndyMac, et cetera. Okay, they lent you money, right? Well, they actually lent you credit. They're forbidden from loaning depositor assets and a whole bunch of things. So we had a lot of these arguments and information before, but it's not true under the current situations anymore. Essentially, from about 2005, previously with some of them, but most of them from about 2005 to 2008, Lehman Brothers milked the investors to fund trusts that bought the notes directly. The nominal lender didn't loan a thing, didn't even put any money into the pot, did nothing but put its name on the paper and get a good commission, and it often got part of the certificates from the trust too in payment. And then it often got to service the loan and make money on the monthlies and so forth. So they got a good piece of the pie, but they didn't loan you anything. and they didn't disclose that they weren't. So it's got a commission to lie. Okay, in these securitization trusts, Lehman got people to invest, used 30% of it to buy the notes, and used 70% for commission and reserve funds to pay the investors back partially at the beginning to keep them shut. They got their money monthly, be a while before they woke up and said anything, right? So they just paid them from those reserve funds their own money to keep them shut up until things belly up. They bought the notes outright without disclosing it to the homeowner, and the lender got a commission to be a front, just to put its name on that note and trust deed to make it legit. Now think about it. If the lender didn't loan anything, and they were the bank or whatever, and it really bought your note outright, this was a security. This wasn't a loan. Well, how did they get a deed of trust from you? By tricking you. A security, which in this case, these are financial assets that are purchased by the trust. When they're purchased by the trust outright, they're not a bank, they're not anything. They don't have the right to that deed of trust. It was a trickery to get it from the start. Lehman and the nominal lender fraudulently misrepresented the actual nature of the transaction to defraud both the investor and the homeowner. Now, foreclosures are rampant. But are there problems? Well, yeah. They'll lie and do anything to get your home. The servicer can't foreclose legally, but they'll try. Foreclosure evictions by unlawful detainer must be done by the proper party. The servicer is not the proper party. Again, MERS can only act as nominee for the lender, and only if they're currently a member. They're not the beneficiary, but if you don't know that, they'll pull something on you. If the securitization trust was created before the loan and bought the note outright, the nominal lender on the note and deed of trust never loaned you anything. Again, fraudulent misrepresentation. If the nominal lender never paid anything, it wasn't the beneficiary. So if you find an assignment by that first lender or a substitution of trustee, were they the real beneficiary? They were named that way. It's a very difficult case to prove, so don't just try to do it without backup, but it's something you can think about. They weren't really the beneficiary. MERS wasn't. In all the court cases across the nation with MERS, the first question they ask is, MERS, did you put the money into the transaction for that loan or whatever it was? And the answer is always no. The lender put the money in. Well, that's a lie too. It was a trust. But if the lender didn't put any money in either, were they really the beneficiary, or was this again a misrepresentation? And if they're not the beneficiary, if the trust or the investor in the trust was the beneficiary from the very beginning and all the paperwork is a lie, then theoretically those assignments and substitutions by that nominal lender that didn't loan any money and that it wasn't the true beneficiary could be contested in court. Now you've got an uphill battle to win. I'm not saying you're going to win. I'm going to say you have an uphill battle in court and this can be done, and there are lawyers that are studying under Neil Garfield and others that are attempting to formulate the background to give the ammo needed to go that way. But as an improper, you might not want to try it unless you really know what you're doing. So is it the trust or is it the investor in the trust? That's the next question, because a lot of them are foreclosing. Wells Fargo Bank trustee, Deutsche Bank trustee, etc. They're all saying, well, they're a trustee for the trust, and the trust funded the loan. And if you get the wire, if you're lucky enough, it's hard to get. I'm not always able to get it myself. If you can get the wire, it will show the name of the bank that was the remitter of the funds for that, which was not Countrywide or IndyMac. It'd be LaSalle Bank or whatever as trustee for, and they won't give the trust on the wire, but at least you know who the trustee was. And it shows where the money came from. It didn't come from IndyMac. It didn't come from Countrywide. It came back east from that entity. Well, if they funded the loan, who is this? And then again, did they fund the loan, or does the investor fund what they used to give to you? More and more foreclosures are happening where the servicer is foreclosing without even an assignment. Often MERS signs assignments and substitutions as beneficiary. All of the above should be voidable with a good lawyer, with good ammo, etc. in court. If you're lucky enough to get a good judge, that is, and even state judges, a lot of them are not that good. That's why I look at 1215.org too. Bill Thornton, talk to him. That's what he's here for. Sometimes you may stop the foreclosure sale or the unlawful detainer eviction if you present it properly. Audits help you understand it, and a good lawyer can help you to present it. Now, let's see. Oops. Did I hit the wrong key? Yeah, there we go. Now, are you or a friend in foreclosure? Well, who's foreclosing? Is it the lender on the note, which we know isn't? Is it the servicer, like Aurora or Litton, etc.? Is it the trustee, Deutsche Bank, Wells Fargo, One West, Chase, etc.? Was an assignment actually recorded to them? That's the first step. Was a substitution of the trustee proper? Who signed the assignment and the substitution? Was there fraud at the inception, misrepresentation, and in the foreclosure process itself? Okay, the final slide. We at American Loan Audits can help. We audit the origination loan docs in 2 steps. A compliances audit to recalculate the APR, to look for and calculate whether they disclosed all their finance charges properly and the prepaid finance charges, etc. Then we do a manual audit that scours the documents. We're looking for other things. We also check the recorded documents for errors to try to help you find out whether they did it right or wrong. We provide a qualified written request to try to get the trust name and other docs. And we'll work with your lawyer to help them understand the potential issues, including the trust, which unfortunately most lawyers don't want to know about. They think they know it all and they're not looking in this direction. So be careful when you choose your lawyer as well, that he knows it, has some understanding, and is willing to go there.
Why they don't want to hear about the trust?
Why what?
Why lawyers don't want to hear about the trust?
Jim?
Changing faith.
Okay, hold that thought. We have a camera pause. Okay. He asked, why is it most lawyers don't want to hear about it? Because it isn't what they've studied in law school. They say, oh, this is probably a trivial item, and the note and trust deeds say it's countrywide home loans, and why are you asking that? And so I'll give them a document. Well, take a look at this. It said that the funder of this IndyMac loan was an IndyMac Securitization Trust 2006-AR5. Well, but the note says, you know, they've studied what they've studied, and they haven't studied Neil Garfield or Michael Pine, and they don't know what's going on right now. And a lot of them resist that, and most of them really just want to do a loan mod and get this thing over with and get you 0.5% off. Yeah.
Do you have a way to give a ballpark sense of your fees?
To get a what?
A ballpark sense of your fees for the audits?
So far, I've been only charging $495
Per loan?
per loan for a first and a $200 extra for a second.
Thank you.
So anyway, that's where we're at. If you want to watch my last video, I show it there at the website. I'll try to post this one, so if you have friends that want to look at it, because everybody needs to understand what's really going on. And almost nobody's talking about it. I learned a couple years ago, started to learn from Gene Keating about this. This guy has been on it for a decade now. He knows stuff, and I learned a little bit from him, but I learned more specifics from Neil Garfield afterwards, who has been in the field as well. And then I understand Michael Pine is also going in this direction. There are some out there, but they're hard to find and hard to study under them, yes.
How long does it take to do a loan audit?
How what?
How long to get?
It can depend. the initial, we do the compliance ease audit usually within a few days or less than a week. The manual audit we then work on after that, and the recorded documents, et cetera. But getting the name of the trust is like pulling teeth. We put in a qualified written request. I know in one case we put in a qualified written request, waited 60 days, and they didn't give us anything, so I defaulted them. Boy, they really started scrambling after that. We defaulted them under RESPA, and they actually gave us the name of the trustee of the trust, which helped in an unlawful detainer action that was being pursued because they'd already foreclosed under Aurora. But in the disclosure from their other lawyer in Colorado, in answer to the qualified written request that I defaulted them on, all of a sudden they came up with, well, we're going to give them something. Okay, we'll give them the name of the trustee. Well, guess what? That blew the unlawful detainer to hell. Because Aurora's own admission from their other lawyer was that the owner of the debt was Wells Fargo Bank trustee. Well, how's Aurora going to foreclose when Aurora's already admitted? It can be fun, but it takes a long time sometimes. It's not easy. But I think I've been told that my time's up, and I've really covered everything anyway. And I thank you.